right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today I have a very different video coming at you. It's January of a new year, so I want to talk about 5 stocks. They all have something in common. I think these 5 stocks are going to have a very difficult year. These are my bottom 5 stocks in the Dow. So this is not what we normally talk about, but I do want to track these this year. So this is something I'm going to keep my eye on. And I do want to broaden out what we talk about in the year 2023. Instead of being hyper-focused, I will still, of course, we talk about Bitcoin and the Bitcoin miners all the time on this channel, and we will continue to do so. But there's a lot of other interesting stocks out there. So if you're new to the channel, remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, it helps the channel out a lot. Lastly, if you want to become a member, you can join the channel by hitting the join button on the YouTube page. It's right next to the subscribe button. If you don't see a join button, there should be a link below in the description. Members get some members-only content. We have a once-a-week members-only live stream. That was yesterday, Tuesday, so every Tuesday after the market closes. And on that live stream, members get to pick a company for me to do a deep dive on. So I will tell you, last week's company was kind of a bombshell. So we ran into something I really did not expect at all. So we get a lot of good content in there, and we have a lot of great conversations. So you're welcome to join us. These are 5 stocks that I'm steering clear of, some of which I think are some people's favorite stocks. So drop me a comment below. I know there's probably going to be a lot of people that don't like some of these picks at all. So this is not necessarily that these are bad companies. I'm looking at the performance of the stock. And I think these 5 stocks are maybe in a little bit of trouble in the year 2023. Okay, first just to recap 2022 and compare this to the other indexes. So you'll see the Dow started at 36,000, ended at about 33,000. It was down 8.8% on the year in 2022. S&P down 19.5%. The Russell 2000, which is the small cap stocks, that was down 21.6% on the year. And then the NASDAQ, which obviously is very tech heavy, that had the worst year out of all of them. That was down 33% on the year. So you can see across the board, 2022 was a very bad year. I just read an article that statistically it was the 7th worst year in the stock market in the last 100 years. So this was not a good year by any measure. And then just for a little extra information, I put Bitcoin on there. Bitcoin was down 64% in the year. Most of the cryptocurrency universe was down even more than that. So you can see there was very little places to hide. Okay, so that puts it in perspective. That's what happened in 2022. I think 2023 is going to be a little bit of a different story. I don't know that these indexes are going to thrive. I'm expecting this to be a very bumpy, choppy year. So I said coming into this year, and I try and reiterate in most of my videos, I think volatility is going to be the word of the year for 2023. I am a buy and hold trader, so personally, I will probably be adding some more swing trades this year just because of what I believe is going to be the high level of volatility that continues from last year. So obviously, this is not financial advice. You know, please do your own due diligence and invest inside your own comfort zone. Okay, so let's take a look and let's get to the 5 stocks. Okay, the first one is Merck, stock ticker MRK. They're a biopharmaceutical company, so they had an unbelievable year in the year 2022. They are now a $277 billion market cap. So, you know, sometimes the market can be a game of musical chairs or rotation, if you will. So I think some of these stocks that held up and have big market caps are going to struggle in the year 2023. So again, this is not to say that Merck is a bad company, but I do think that they will end the year lower than they are. They're at $109 right now. They're at $277 billion market cap. I think they will be down this year in the year 2023, and I want to show you something about Merck. Okay, so this is an article, the 5 best performing Dow stocks in 2022. Merck was the 2nd best performing Dow stock. It was up over 50% in the year 2022. So that is a massive, massive move to the upside for such a large cap stock. This ran in 2022, and I think it's going to give some back in 2023. Okay, the next one is Chevron. So you can see Chevron's at $178. Chevron is even bigger than Merck. Chevron's a $342 billion company. Okay, so if we look at this same list, the only thing that did better than Merck last year was Chevron. They were up 56.6% on the year in 2022. So obviously, we know the price of oil was a situation in 2022. I'm not saying that that's going to be fixed in 2023, but I think the worst of that is behind us. And again, I said there was almost no place to hide in 2022. Well, this was the other place to hide. You could hide in some healthcare stocks, and of course, in the energy sector, most specifically, the oil and gas stocks had great years in a year where you saw everything else got wrecked. So these were the number 1 and number 2 performers in the year 2022, and that's a part of the reason they overperformed underperformed so much. They were such a flight to safety that I think they're going to struggle in 2023 as money moves into more risk-on type environments. Not that I think we're going to have a massive shift from risk-off to risk-on. I just think the market's been a little bit in hibernation and complete fear, so I think that's going to start to loosen up. So this is my second stock that I think is going to end the year lower than it is today right now. It's at $178 right now, and I think it's down from here. I think this stock is going to struggle this year. I'm not predicting that these stocks crash, so I want to make myself clear. I don't think that any of these stocks are going to crash. I just think they're going to have a rough year and they're going to end up down on the year. And so for that reason, these are stocks that I'm staying away from. Okay, number 3, the Walt Disney Company. So Walt Disney is trading at $105. Walt Disney is already way down off of its highs, but it still is way up in the last 10-year period. You're going to see this is a $192 billion market cap company. The Walt Disney Company has had some fundamental things happen to them that I just think it's going to take some time for them to recover from. Number one, obviously having to shut down their parks for the better period of a year and a half was a big giant dent to them. So it seems like we're having a little bit of a return to business as usual, and hopefully, the next thing doesn't come along, and hopefully they get to keep their parks open from this day forward. But that was a big dent for them, and it's not easy to recover from that. And the other thing that happened with the Walt Disney Company is they made a purchase and acquisition. They acquired 20th Century Fox, which they're now calling 20th Century Studios. They paid $71 billion for that. Now, that deal closed a couple of years ago, and then right after that, the parks had to shut down, so it's been a rough run for the last few years. But the thing is, that really restructured the order of their balance sheet, and they went from a company whose balance sheet I liked a lot to a company whose balance sheet I'm a little bit, I wouldn't say worried about, but it does not look like it used to. This is not the fortress it once was. And $71 billion was an astronomical amount of money to pay for that asset. I don't think it was worth it. They were already the largest media conglomerate in the world, so why they needed to buy one of the other top 5 media conglomerates, I think they're not going to get a lot of marginal return on their investment. And what I mean by that is, they went from the biggest to even bigger. So there's a lot of other companies out there trying to take up market share. So I just don't think it was time for Disney to give them more of an opportunity to steal some of their market share. So I think that is going to happen over the course of 2023. I think this is going to be a tough year for them. Again, I'm not predicting that they crash, but they did get down to about $86 late in 2022. So I could see them retracing their steps, back down into the 80s, maybe worse. Okay, the next one is probably really going to make some people frustrated or disagree. So let me know if you disagree with this next one. This has been the number one stock in the stock market for years and years and years. It's not Tesla. Recently, Tesla has competed. So these two companies have competed for the most popular stock, the most traded stock in the stock market for several years now. So of course, I'm talking about Apple. And Apple is not only one of the most popular stocks in the stock market and has been for years, but it is the largest stock by market cap in the US stock market. They are the last company that is still over $2 trillion. Microsoft is the second largest company in the US. They are now at like $1.75 trillion. The market cap of this company has spiraled upward in a way that's incredible to me. So, and again, I think tech is going to have a tough year. So I would put a lot of the tech stocks in the stocks that I'm a little worried about in the year 2023, particularly the high cap and ultra high cap tech stocks. You can see we've just had announcement after announcement after announcement. Almost every single one of these large tech companies has just did a round of layoffs of somewhere in the neighborhood of 10,000 employees each company. So I think there's a period of time where there's going to be a pullback. So Apple has an awful lot left to give as far as going to the downside. So I think 2023 is going to be a tough year for Apple. My final stock, my number one stock that I think is going to have a tough year. So this is Salesforce.com, stock ticker CRM. They are a $153 billion market cap. I will be honest, this company has never made sense to me. I don't understand why they have that size market cap. Look at their PE ratio. This says 567 to 1. So that is a ridiculous PE ratio. And I don't know exactly what it is. This is what's on Yahoo Finance, but I will tell you, I mean, this is a company that maybe makes like $500 million a year, and they're $150 billion market cap. And there's just not a growth path. I don't see them getting bigger. Their growth is slowing. Operating income, they've hovered somewhere around $500 million plus or minus for the last 4 or 5 years in a row. So they're not growing the bottom line. And a bottom line of $500 million does not a $150 billion company make, in my opinion. So this one, that's why this is my number one company on the list. The other companies I just expect, for various different reasons, their stock to pull back in 2023. This one, I think, is on the downturn. Having said that, stocks can behave irrationally, so we will see. This is a stock that's in a place that makes no sense to me at all right now, so it could remain in that place for a long time. I think it's already begun its downward descension, and I think that's going to continue. These are 5 very popular stocks, so let me know in the comments below. It's okay if you disagree with me. So I will check in on this list throughout the year and see how these stocks are doing versus the market overall. This is one of several videos I wanted to get out at the beginning of the year here, talking about what I think, big picture is going to happen in the year 2023. So remember to subscribe to the channel, hit the notification bell. So thanks again for watching, and I will see you in the next video.